Only 55% of adults in developing economies could access extra funds within 30 days without much difficulty. Across Africa, there are over 400 million financially excluded adults. How do we bridge these? We are joined by James Claude, the CEO of Global Voice Group. James, thank you so much for making time to speak to us. You're in a better position to just help us unpack. First, tell us, where are we when you're looking at financial and digital inclusion?
Yeah, when you're talking about financial inclusion, I think it's important to stay a few seconds to look at the definition of financial inclusion, because the typical definition of bank versus unbanked to consider whether someone is financially included, I firmly believe it's completely outdated. Because today in the West, in Europe, in the United States, the new buzzword now is neobank. What is a better neobank than mobile money service providers providing those services in Kenya or in Uganda, where all the people they are serving can access to loans, can make deposits, and can have savings. So I believe there's a revolution going on in Africa. When you mention 400 million people financially excluded, we need to look at where we came from 10 years ago or 15 years ago. I believe there are a lot of progresses being made. And I can speak a little bit from a regulatory standpoint, because the company I lead, we provide RegTech technologies to regulatory bodies so they can really oversee what is happening in the financial sectors, which also we can help them to really further financial inclusion. So I believe despite the progress, there's still a lot to be done. And then from their perspective, I'll mention a couple of things, if you allow me. Number one, I believe regulatory bodies need to really embrace technologies, because if you are overseeing financial sector with all the innovative solutions coming out in the fintech and so on, I think regulatory bodies cannot be like a barrier for the development of financial services overall. So they need to embrace technology by adopting the right tools so they can really oversee what is happening in the sector. And number two, I think they need to approach the regulatory framework using an adaptive kind of regulation. You cannot be using 10 years old or 15 years regulations to overseeing sectors that is changing on a daily basis. So this is also an important factor. And the last point I'd like to mention, when we look at Africa today, regulatory bodies and countries cannot continue to operate in silos. There's a huge potential of creating a 1 billion people digital single market. In order for that to happen, I believe, again, regulatory bodies, they really need to work together, harmonizing their policies to foster cross-border and transactions. And I believe all of those will result in further financial inclusion, where all people in Africa can really take benefit on all of the developments happening in the sector.
Yeah, James, you've just touched on the policy, and I can't help think of what would it really take to have the harmonization, as you have rightly put. We've seen regulatory bodies, even them, they are aware that the regulatory environment still needs to keep up with the changing times. So what could be done?
No, there are a few examples, and I can take the example of Ghana, where the financial regulator, they set up a sandbox where before new system go live, before innovative solutions can be deployed, they have an environment where they can test those solutions and look at what will be the implication on the existing regulatory framework. This is on one side. On the other side, I believe the best way to collaborate with each other, I believe the economies in Africa are quite similar despite the differences, is through different agencies. And that's why I praise a lot the work being done by Smart Africa Alliance, where they bring together regulatory bodies from many different countries in Africa, where they can exchange their experiences, because countries are not at the same level. They can still learn from each other and adapt the different regulations. So this way, when you make a transaction, or when you are operating within the digital economy of Kenya, that can be translated into operating within Rwanda, and that's the exact meaning of a digital single market.
Yeah, I mean, we have made many positive strides where we are presently. There's still a lot of more work to be done. Just looking at the future, we're seeing Africa's population is expected to double to 2.5 billion by 2050. And much of this will be within the urban centers. So how can innovation, how can, when you're looking at addressing the different gaps, so how can these be fast-tracked in order to not always working in surplus, always catching up? So how can we be at the front line of the curve?
I believe the technical or financial inclusion agenda should be part of, at the center of the vision of the countries. I believe it's very important. It should form part of the broader policy. And there are a lot of challenges. Something I'd like to mention is now we're talking about digital economy. In the digital economy, when you operate there, how can you identify the people operating within that space? So that's the concept of digital ID, digital identity. In many African countries, we lack typical or basic identity. And I believe there is a need for leapfrog from not having identity at all to go into having proper digital identities where you can transact online and you can have access to government services, and then you can be properly identified and you can pay your taxes, and which also can help revenue authorities to close their tax to GDP ratio, which is very essential for them to really have more money to invest into the same sector. So again, I believe more investments are required, and the investment also should really be strategic and looking at each particular countries and invest in the right subsector in order to really fulfill their mandate of filling that gap.
Yeah, we have less than 1 minute left, but looking at the infrastructure gap, looking at the financing that is actually needed for the African continent to be able to leapfrog and be able to just catch up with the rest of the world. So just to talk to us about that, the financing gap that is there, the infrastructure gap, and the rates at which we're seeing investors coming into the continent.
No, I mean, there is, of course, room for investors to go and invest in Africa, but also African countries should also look from inside as well. There are innovative way they can finance certain local projects. Let's say that the financial sector or the telecom sectors, they are moving quite well, and tax collection is an issue. There are innovative financing for development, which is a concept coined by United Nations, where they can apply micro levies on specific type of transactions in order to bring new local revenues that they don't have today. So in Africa, we shouldn't only count on external investors to come and bring money. I believe also that's something, again, I go back to the regulatory bodies, but governments from a policy standpoint should look at their finance law and see which area within my countries are performing better than others. What type of effective micro levies or taxes that I can apply that makes sense without really making a huge difference in the life of the people, which at the same time can be used to be reinvested within the economy overall and the digital economy.